Good evening, everybody. My name is Kiana Danielle. I'm going to be your host today for today's webinar, How to Trade US Dollar Crosses Ahead of NFP. Thank you so much, everybody, for joining me. Before we get into this, please let me know if you can hear me properly and if you can see my screen properly right now. Oh, I guess I wasn't actually showing my screen.
The broadcast is now starting. All attendees are in listen-only mode.
All right, everybody, good evening. I think before you weren't hearing me properly. Welcome to the webinar. Today's webinar is How to Trade USD Crosses Ahead of the NFP. My name is Kiana Danielle. I'm the CEO of InvestDiva.com. Before we start the webinar, can you please type in a Y for yes if you can hear me properly, and double Y for yes, yes, if you can see my screen, so that we can get started. First, I wanted to welcome everybody. Wow. Yes, yes. Thank you, everyone, for interacting. Welcome, David, Geza, Jared, Mahmoud, Melissa, Min, Musak, Pietro, Pierre, Piotr, Sunny, Tariq, Veronica. All right. And a lot of people are joining us as we're speaking. This is great. Thank you so much for interacting. First of all, let me tell you that this is a live webinar, so please do ask any questions that you may have during the webinar. This is your chance. And after the webinar, we will have the webinar recorded and available for everybody to review if needed on Orbex.com. So first, let's start with, oh, where did things go? All right, so here's how I look like. This is me, and that is me too. I'm just posing. It's always good to put a little bit of a picture to the voice for newcomers, and for those of you who are already familiar with me or returning, welcome back. So today we're going to talk about NFP, and so I think some of you might not know what the heck NFP is. Today I'm going to be a little bit more colorful during the webinar. And for that, I've actually prepared one of our InvestDiva videos that is going to explain to you, it's again me, don't worry about that, what NFP exactly is, so that when we are all on the same page, we'll go ahead and talk about how to, how to invest or trade the US dollar crosses during the NFP. Okay. All right. So we are going to access the video right here from the fundamentals and the Forex bean. So just so you know, NFP stands for non-farm payrolls. So let's listen to this video, and please let me know if you can hear the video. Otherwise, we'll just go ahead and I'll do the whole thing for you.
Non-farm payroll data, also referred to as non-farm employment change, shows the total number of paid U.S. workers in every business, excluding employees of places like farms, private households, and general government. These data are also analyzed closely because of their importance in identifying the rate of economic growth and inflation. If the non-farm payroll is expanding, it is a good indication that the economy is growing, and vice versa. So basically, a higher figure of non-farm payrolls equals higher currency rate. So how can you use the non-farm payroll data in trading Forex? You first listen to the gossip. Before the actual data are released, a lot of geeky analysts and economists sit together and announce payroll estimates. Then you wait for the data to be announced at around 1:30 GMT in the afternoon on the first Friday of the month. If the actual data comes in lower than the economist's estimates, that usually signals that the US dollar is weakening, and that is a good time to short the dollar or to sell it. If actual non-farm payroll number is larger than forecast, that is good for the currency. Great job.
All right, so that was that. That was just a review of what non-farm payrolls are. And so as you may know, what is coming up on the economic calendar is the non-farm payrolls this Friday, April Fool's Day. So we're going to look at the US dollar crosses to see what may happen on any sort of outcome. So before we get into the non-farm payrolls, though, let's talk about some important things that you need to keep in mind about the U.S. economy. And yesterday we had pretty important speech by Janet Yellen, who is the the chairperson of Federal Reserve in the U.S. And whatever she says normally really moves the market, and what she said yesterday really has been creating volatility in the U.S. dollar crosses, and it's been actually in the negative side. So I'll first tell you exactly what she said, and then I'll tell you what I think that means, all right? So the first thing that she said was basically proceed with caution. So as you might know, we had a rate hike back in December in a decade for the first time. It was a very small amount, but still it created a lot of speculation. And because of that speculation, the US dollar was strengthening for quite a while. And that's why we were pretty bullish on US dollar. But the problem is after they raise the interest rates, they kind of change their hawkish tone into a dovish tone and saying, oh, we might not raise the interest rates further, or we might just like really slow it down. And yesterday, and during her testimony, Janet Yellen still was pretty cautious about it. And perhaps the biggest factor that put the dollar in a sell-off mode against its forex counterparts yesterday was Janet Yellen's reminder that the Fed should move cautiously when it comes to monetary policy tightening. And for several market watchers, this basically decreased the hopes of an April FOMC rate hike, contrary to what the Fed policymakers, including Lockhart and Dottley, suggested in their testimonies last week. So last week we were getting a little bit of an excitement about that, but yesterday Janet Yellen basically completely ignored what they had said. And so she explained that the U.S. Central Bank has more than enough tightening options on the table. So should economic growth continue to pick up, but they have few tools left in case of a downtrend, if the downtrend worsens, and that is why they want to be a little bit more cautious so that they don't get the markets pretty like too crazy. And the second point that she made was her concerns about the weaker global economy, and the reason why Janet Yellen is still discussing the idea of further stimulus is that she believes that a weaker global economic and financial conditions pose risks to the U.S. outlook as well. In particular, she highlighted that the Chinese economy will slow in the coming years as it transitions away from investment toward consumption and from exports toward domestic sources of growth, and that this shift will be accompanied by a lot of uncertainty. And aside from that, Yellen also explained that the continuous drop in oil prices, which actually is no longer the case, but she said it anyway, might once again lead to financial strains among energy-rich nations and increasing layoffs and even cutbacks in government spending, and that is also one of the points of caution. And her third point was lower inflation expectations. And she said that there are increased downside risks to the inflation outlook. And again, the slump in the oil prices is mostly to blame. And she admitted that it may take longer for the U.S. economy to achieve its 2% inflation outlook than initially expected, and that this might require a more accommodative stance of monetary policy than would otherwise be appropriate. So these are the reasons why she basically came up with a cautious outlook. But there was an interesting discussion that perhaps the central banks, including the Federal Reserve, is trying to confuse the investors, and that is because the reason why we think that could be the case is that something unusual happened after the G20 meeting this year, and all of the central banks went to a very, very high accommodative mode. And so, for example, from the move to negative interest rates in Europe and Japan, as well as China's decision to devalue its currency, the markets have caught most investors by surprise because they haven't followed the proper script that we normally go by. And they have instead looked to have being fully manipulated. We have been, I mean, myself included, we've been manipulated by the central banks. So when the Fed came out, it was much more dovish than anyone expected, and it was probably part of their strategy to basically make sure the markets remained relatively calm, because last time we were speculating that the Fed is going to increase their interest rates, the dollar was just really skyrocketing, and right after that, the stock market really nearly crashed just based on the trader sentiment. And maybe that is the reason why the Fed is choosing the dovish tone as opposed to actually saying what they're thinking about. So again, before we get into NFP, there are some other things that we also want to look at when it comes to U.S. economy. We want to know how is the U.S. economy. So that is actually the interesting part when Janet Yellen comes out and say, oh, we don't know what to do, while the growth, actually, the GDP has been improving. Unemployment has been at 8-year low. Business confidence is a little bit, the conditions is a little bit mixed, but consumer sentiment has been good, and inflation has actually been getting better. So for that reason, that kind of backs up what I just talked about when it comes to Janet Yellen and her cautious tone, because the U.S. economy is actually doing well. So it's very weird for Janet Yellen to come and say, oh, we still have worries. Yeah, I understand the global worries. Yeah, we understand that as we talked about last week, a risk of Brexit, or we understand Europe not being in a really good condition, or China might have some risks coming up, uncertainties. But U.S. economy on its own is doing all right. But again, this is a very sentiment driven market. And for that reason, the U.S. dollar, as we've seen, let's actually go to the chart right now, has been really pushing it back. In the past 20 minutes, it actually went back up a little bit versus the Canadian dollar. It went back up versus, oh no, it's still pushing. This is the monthly of dollar Swissy, but it did touch 0.9559, which actually was one of the currencies that we talked about before, and we did have a bearish position on this one. So that one closed with profit. So so as you can see, the U.S. dollar is actually kind of under pressure versus the Japanese yen also. It had a bit of a good round from March 18th, but in the past 2 days, right as Janet Yellen was speaking, this is what happened. So the reason why I'm talking about this is also important when it comes to the NFP. NFP is one of the most important economic data out there every month, and as I explained before, when the NFP numbers are better, we can expect the US dollar to get better. So now, for those of you who don't know how to even identify, or when to identify, what to keep an eye on, the best way to go, Orbix has a very good economic calendar right over here. So go to orbix.com, go to the economic calendar, right? And today we want to talk about U.S. economy. So obviously, we're going to go to filters. It's a very good feature that they have. We're going to select only the U.S. and we're going to filter the results. And as you can see, we have the non-farm payrolls scheduled for Friday, April 1st. Well, this is 12:30. This is supposed to be New York time, but right now in New York is actually, oh, I'm sorry, okay, 12:30 in New York. I'm assuming it should be 5 p.m. your time, GMT. You can definitely change that your current time. So this is the GMT, I'm sorry. So this is the GMT, so you can't change it. So this is going to be 12:30 p.m. GMT. So there are a number of ways that you can trade the NFP. First of all, there are 3 ways. We have short-term traders, we have long-term traders, and we have speculators. All right. So speculators are the ones who trade any important economic data, including NFP, before it actually comes out. And they look at the estimates, the forecast. And as you can see right now, the forecast for NFP is actually lower than what it was last month. So people are speculating that we're going to have a lower NFP number around 205,000. And for that reason, that could be one of the other reasons why we are seeing the pressure on the US dollar. So because of this estimate, a speculator would go ahead and short the US dollar versus the its counterparts. I'm going to get into that a little bit more because it really depends which counterpart you're going to choose. As you know, currencies come in pairs, and you cannot only focus on one economic data or one currency or one country's economy when you're trading the currency. But right now we're assuming that everything else is fixed, or that you're trading the US index, the US dollar index, and for that, an NFP trader would just go ahead looking at this and saying, okay, so this is going to be bad. For that reason, I'm going to short the US dollar right before the NFP. And as we approach 12:30 p.m. GMT that day, I'm going to exit my position, and I'm going to just leave it, and I'm going to move on to the next risk event. All right. And then the second type of trader would be the short-term trader after the fact, right? So let's say then we're going to have 2 options, right? So we're going to have if the actual NFP comes out better than expected, better than anything better than 205,000. So it's funny, it's very interesting that people take a look at the expectation further than or more than the previous month. Whatever that is, the market sentiment, what we want to play by the market sentiment if we are a sentiment trader, right? So if the results come out anything better than what the forecast, the analysts have been forecasting, that is when you want to go long or buy the US dollar versus its counterparts for a short period of time until the market sentiment chills out. Because what normally happens is that first people see the number, they get excited, everybody starts buy the US dollar, and after 10 minutes or so, or sometimes it takes an hour, they realize, they look a little bit more into details of the data. What brought this? What were the consequences? What were the conditions? How did it compare to the previous month? And all the other underlying important stuff that actually matters. And that is when you want to actually get out of that market. So that is going to be a very short-term trade, hopefully with profit, right? And then if the market, if the data comes out worse than expected, anything lower than 205, that would push the US dollar further down. And then again, that is going to be a short-term and long-term kind of a discussion actually for that one, because that will kind of back up what Janet Yellen was saying if the NFP numbers come lower than expected, and that could not only be useful to know for short-term traders, but also for long-term traders. All right. But if you are a long-term trader, if you're already in US dollar positions, that is what we're going to talk about next. But let's also take a look at what happened last time when the NFP came out. And even though history doesn't necessarily repeat itself, it's not a bad idea to take a look. So we're going to do, last time was February, and we're going to take a look at the calendar, right? And we're going to have only the important stuff. And we're going to filter this. Oh, no result. What did I do? Okay, so we can do this up until March 3rd. Actually, I had this open before, so I don't have to do this again. All right. So non-farm payrolls of December was better than expected, and it was better than expected but lower than previous. Let's move forward to non-farm payrolls February. February, so this is an example, okay? Actually, no, let's go from March. We don't have March. All right. Let's go from February and then move back up to see how it happened. So in February, non-farm payroll were significantly lower than estimate and lower than the previous month. So that was a very, very bad sign. All right. So let's see what a typical, so what day was this? This was February 5th. So we're going to find that candlestick on our chart. Let's take a look at, okay, this is exactly it. This is one. Let's take a look at dollar yen and look what happened. On the day of February 4th, this is the candlestick, right? This is a bearish candlestick. You see the volatility. So as the data came out, the dollar-yen pair dropped all the way down to 110 for the first time. And look, 110 for the first time since October 2014. So this was the first time, all because of the NFP result. It touched down there, but then as the market chilled out a little bit, it actually went back up. So that's why we have this long shadow. Let me just point at it a little bit. So that's why we have this long shadow over here, right? And then, so the markets moved back up. So right after the NFP, we had this massive drop in the US dollar versus the Japanese yen. And then the market moved a little bit back further up, but it wasn't able to end the day and the trading day on the positive end. So that was an example of what happens to the US dollar when the NFP numbers are worse than expected. All right, so now let's have an example of when the NFP number is better than expected. All right, so that happened back in non-farm payrolls back in December, right? We had a better than expected non-farm payrolls for November. However, it was still worse than the previous time. All right, so this is December 4th. Let's see what happened to the dollar-yen pair on December 4th. So it's right about, this is December 7th, so it should be right around here. So a positive December, this is a little bit hard to actually figure out. So for that reason, I'm going to do Let's do a little bit more of, okay, December 4th should be something, yeah, this must be it, right? This is, yep, this is the beginning of December 3rd into, I'm sorry, this is December, oops. Okay, so this is December 4th. So the day before that, right, the market was actually pretty bearish. The market was volatile, probably on the anticipation that, as you can see, on the anticipation that we're going to have a significantly lower NFP comparing to the previous time. So that's why the dollar-yen pair was on a bearish mode the day before NFP. And on the day, the data came out better than expected, although it was still worse than previous month. But the initial reaction was bullish and the market continued going up. And even the next Monday, the market opened on a positive end. And then after that, we had the drop in the US dollar. So that is how a short-term trader could expect the markets to be affected by the NFP results on the day. So these two examples, both of the results were still lower than the previous time. So that's how you can only imagine if this time and this week we're going to have better than expected and better than last time's better than last time NFP result, that would significantly impact the market in a way that the US dollar would correct all the let's actually go back to the economic calendar because this is pretty important. So we're going to take a look at the United States and all the important stuff. Filter results. All right. So if it comes out, let's say at 250, right? That is going to have a significant impact on and positive impact on the US dollar, not only because of NFP itself, but also because it will negate what Janet Yellen was saying yesterday. So if the NFP comes out better than expected, actually a rate hike, and better than previous time, a rate hike in April could come back on the table. So that could really create a ton of volatility on the US dollar. However, if it comes worse than expected, the current pressure would continue down. And so let's take a look at on how, depending on the different scenarios, we could be trading the US dollar. So does anybody have a preference as to which currency pair I'm going to focus on when talking about NFP? Because there are 7 major currency pairs, all include the US dollar. And so we could go with either dollar yen, dollar cat, dollar Swissy, pound dollar, euro dollar, Aussie dollar, or Kiwi dollar. And because we only have 30 minutes left, we may not be able to cover them all. So if you do have a preference that you want me to focus on today, please do let me know. Otherwise, I'm going to start with the dollar-yen pair. All right. So dollar-yen is a good pair to trade during risk events because such as NFP, because the Japanese, first of all, NFP is going to be on Friday, and by that time, the NFP is, yeah, I'm happy that you guys are excited about the dollar-yen pair. By that time, on Friday, the Japanese market is already closed. So the chances are that the Japanese yen on its own is not going to have much of a movement, right? So the NFP you can maximize the volatility created by the NFP numbers on dollar-yen pair. All right. So today, it's a Wednesday. And let's take a look at the dollar-yen pair. What is going on? The dollar-yen pair dropped massively after the rate hike. And this is the daily, right? After the rate hike, and after basically once the beginning of January, we had this massive concern about the Chinese economy. Then Japanese central Bank of Japan decided to do something about it because they really dislike a strong Japanese yen because their economy really depends on exports. So that's why they introduced a negative interest rate, and that is the day that the dollar-yen pair went up. And it didn't last long. It's been on a dropping. So it dropped, bam, 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 for 2 straight weeks. And now it has been ranging. It has been supported by a very strong support level right over here at 110, almost 111. So let's actually fixate this at 111. So this is our very strong support level. The reason why I call it a very strong support level is, first of all, because if we add a Fibonacci retracement level, we will see that this support level is actually pretty close to 61% Fibonacci retracement level. That is why we all even had it right back here. We had this, the pair right over here, right? We had the pair testing even the 61% Fibonacci, and it went back up. So the pair is obviously supported by the 61% Fibonacci at the 110 support level, and the resistance over here well, I mean, it's kind of it's not a straight support level. So for that reason, I'm going to use an angled support level over here. So this is our support level right now. All right, let's zoom back in. Our support level is kind of a triangle. So as you can see, we cannot see, unfortunately, so right over here you see, so this resistance level and this support level, if you continue to, let's see if we can make that happen. No, we can't. If you connect these two lines, it will end up becoming a triangle. So the pair is basically trapped inside a triangle with the resistance being around here. All right, and also I would like to add some more indicators, including the Ichimoku Kinkohyo, which is one of my favorite indicators. So as you can see, the pair right now, the daily chart is below the Ichimoku cloud. So this, the best time to use the Ichimoku cloud actually is the minute the pair breaks above or below it. That is the best time. And so if we go to the 4-hour chart, you can see that that is actually kind of above the Ichimoku cloud. The pair is kind of above the Ichimoku cloud and it's kind of trying to break below it. So the pressure has gone down a little bit, right? But on the daily chart, it's still below the Ichimoku cloud, so we have a little bit of a downward pressure. I'm going to remove this because it really makes the chart look, oops, we removed the wrong thing. It looked pretty crowded. Okay. So it's below the Ichimoku cloud, so we still have a significantly bearish signal for dollar yen. So on the day, we're expecting this pair to continue along this line. And perhaps, especially if the NFP doesn't come out better than expected, it probably won't be able to break above this. All right. So now on the day, let's say the pair is continuing ranging, right? Before the NFP, we're going to expect further drops in dollar yen. But this is, again, an expectation. Here is a disclaimer. I don't trade based on speculations. but many people do, and I'm here just to tell you what could happen. Trading based on speculation is really, really close to gambling, so please be aware of that, and don't jump into a massive trade if you're just speculating. If you do have the risk appetite and you do have the money, please feel free to go with it. But if you don't, you want to be a little bit cautious, more cautious with that. All right. So on the day, you're going to expect a little bit further drops. So it's going to be the second 2 candlesticks from today. All right. And at the time of the NFP, pay close attention to the results right at the time. If it's better than expected, you can immediately get into a bullish position. I'm talking about a short-term trade, right? And target, this is important, don't go overboard with your target if you're day trading the NFP and the NFP by its own, all right? So depending on how low the dollar yen has gotten by then, I'm going to actually show you the exact support and resistance levels that you could aim for on the day. All right. So I've changed now back to the 4-hour chart, right? Because I wanted to use a shorter term Fibonacci retracement level based on the most recent uptrend that started back in March 17th and continued all the way through March 29th, which is 2 days ago, or to March 28th, was it? All right. So based on that, right now we're right at the around 50%. So you can see that the 50% held actually. The 50% Fibonacci level held, further drops. So we're going to see the market basically dancing around these levels. I'm going to remove this Fibonacci level so you are not confused. If I could. Apparently I can't, and I don't want to. All right. So please don't get confused. This is the important Fibonacci retracement levels that we're going to look at. So the 23%, which is 113, right? And then the support level, the resistance level at 100, so right around here, 113.74. So depending on where you get in and how the market moves, if it moves all the way down to 111 right before NFP, and the NFP number is positive, I would aim for one of these Fibonacci retracement levels. If you're going very high on leverage, I would go to the next Fibonacci retracement. So if you're getting into a bullish position on a positive, better than expected NFP outcome at 111, I would aim 112, 13 around here, or if you want to go a little bit higher, I would aim 112, 50. If the market is at 50% at the time of NFP, right before NFP, and you're going bullish, I would go to the, I would target one of these 2 resistance levels, and vice versa. All right. On the other hand, and also, so one other thing that you want to keep in mind, if the NFP number comes in better than expected, but worse than last time, that is when you want to be more cautious and more risk averse with your target. So that is when you really are better off targeting the closest Fibonacci retracement level, or the closest resistance level. But if the NFP numbers comes out better than expected and better than last time numbers, that is when you can expand a little bit and even get into a longer term position targeting a 113 or 113.70, but probably not above this area for the moment if you're not a super long-term trader. All right. And so on the other hand, let's say the NFP numbers come worse than expected. That is one you want to be a little bit, you want to pay attention to technicals even more. Because if the numbers come worse than expected, we're obviously going to expect a drop in dollar yen. Okay? And then what's very important to pay attention to is oops, we have way too many lines over here, so let's not confuse you. I'm going to delete these. All right, I'm going to delete this one too. I hope you already got it. So I'm going to delete this one as well. So one thing that you really need to keep an eye on in case of a worse than expected NFP is the 110 level. So in case of a worse than expected NFP, at that moment you want to get into a bearish position. And the first target, if it's not already at 110, it would be 110. But because this is such an important level, we could see that this level holds it depending on the market sentiment, depending on what people are thinking. But I mean, if NFP comes out worse than expected, there is a good chance that this, oops, are you guys still here? I just heard something. All right, that was a funny sound. Okay, so if the NFP number comes worse than expected, there is a good chance that the market is going to break below 110. So in that case, you might, and I'm just saying might, consider going to the next support level. The next support level, not based on a Fibonacci, but based on previous activity, is this one, not green, but purple. Oh, by the way, for those of you new here, I always show the support levels as purple, and I apologize for the mixture over here. These are lines from our previous webinars from back I believe back in 2015. That's why we have a lot of purple colors over here. So I show purple for resistance, and I show green, purple for support, green for resistance, and orange for pivot level. And yes, this is a very long-term pivot level at 121.50. Also, obviously, the resistance level. And if the market at some point breaks above it, if we have a massive, incredibly awesome NFP numbers, a break above it would indicate further up moves towards 125, which is the previous resistance level over here. So this is a monthly chart of dollar yen. Let's take a little bit deeper look at this. As you can see, this market completed a cycle that started back in 2008. It's a saucer top, but it was not able to break above the neckline, and it was not able to reach the highs of 2002 and highs of 1998. Those are the golden times of Japan, and Japan and the U.S. had a very good relationship. That is why U.S. really helped out Japan with devaluating their currency, and it seems like this may not be the case at this time, and the Japanese yen is kind of giving up on its weakness. All right, so let's see if we have any questions here. Where is my question box? I'm not even sure if I can get your questions right now because I somehow accidentally closed the question box over here. I'll find it. Let's see, is this it? All right. Yeah, I feel like there is no question over here. Oh, there is. Not. Okay, good. All right, so next I'm going to cover how to trade another currency pair in case of an NFP. What do you guys think of dollar CAD? Or maybe even dollar Swissy? Dollar Swissy is also kind of neutral. Dollar CAD is very much affected by oil prices. Oil prices went down today, but still oil has been doing really good, and it started to overcome the previous pressure. So for that reason, we have been seeing massive drops in the dollar CAD pair. That indicates that the Canadian dollar is getting strong. It's getting strong because of oil, and the U.S. dollar is getting weakened. The combination has caused the Canadian dollar to really drop the ball and go all the way down. So in case of an NFP, what's going to happen? Again, so with dollar CAD is a little bit more complicated than dollar yen because Canada is going to be open. The traders are going to be awake, and we may even see, let's see if we have anything from Canada on the day. On Friday, we are, okay, we do have the RBC manufacturing PMI from Canada, so it is going to be a little bit more complicated when it comes to dollar CAD trading on Friday. But then again, don't forget that dollar CAD is right now under pressure, and I did explain, I mean, actually, you know what, because we have a very short period of time, if you want to learn more about dollar CAD, go to investiva.com. I have a very fully covered article about dollar CAD, the fundamentals, about oil, about U.S. economy, about Canada's economy, and all the charts and technical analysis that you may need. So for dollar CAD, because we're running out of time, I would have you to go through on Investiva and check on it. So instead, I'm going to cover dollar Swissy in case of an NFP. All right, at the time of the NFP, there is going to be an NFP. So what has dollar Swissy been doing? This is a monthly chart, right? So dollar Swissy, oops, this is a very, very long term, right? Dollar Swissy dropped back in January of 2015 when the Swiss Central Bank removed the cap on Euro Swissy pair, and we had this drop and then we had the correction. So dollar Swissy as is normally likes to range unless something crazy happens. And this range can be identified. Currently I'm going to remove these two and do the technical analysis from scratch. So the first thing we can do in order zooming from long term into short term, we had a crazy drop and downtrend from 2010 all the way to 2011, and then this market started to kind of move within sort of a channel. So let's see if this channel, it's kind of a channel, oops, the channel is not this. All right, let's see if we can remove this. All right, so this is the channel we're trying to draw and see if this market actually gets very hard to okay, there you go. So this is sort of, it's not a very strong channel, but it is kind of moving to the upside on a monthly basis all the way from back in 2011. Even though we had this a massive drop in January 2015, the market has generally been going up. In the past 2 months, it has been dropping a little bit. It's been held currently by the 38% Fibonacci retracement level. So this is our pivot level. We're going to draw it. We're going to color it as orange so that we know this is our pivot, right? And now we're going to move back to the daily chart. It shows a little bit of a different So the pivot level is already broken below the pivot level. Actually, now that when you zoom in, it's broken below the. I'm sorry, it was 23% Fibonacci. It's already broken below it. So this is our first bearish signal for this pair. I'm going to insert the Ichimoku cloud. Oops, the market is also below the Ichimoku cloud. So we have a number of bearish signals when it comes to dollar Swissy at the moment. And one of the reasons is potentially this speculation. So one of yesterday's drops were because of cautious speech of Janet Yellen that helped the pair finally completely break and confirm below the 23% Fibonacci. All right, and now we're approaching our first support level. Where is our first support level? Is the lows of, wow, this support level is pretty strong. Why? Because it has been tested multiple times. It's been tested back in March 2015, twice, and then all the way in April, right over here, and then it acted as a resistance over here, and then it was tested again back in October. It held, and that made it super important. It actually held it, and not only that, it prevented this double top pattern to complete. So that's why this is a very important level. So in case, so this is definitely a level that we want to take a look at. So we have two levels right now. Let's, for shorter term trades, we need one more support level and a resistance level. For the next support level, I'm actually going to use Fibonacci on the latest uptrend and the longest uptrend from here to here. This actually didn't help much. It helped with the resistance. So for that reason, for the next support level, we're going to use previous lows. So I think around this area, this has been tested a bunch of times, actually lower than this. So around here. So yep, this could be one, so 0.9574 is sort of the zone of the next support level, which actually we saw the market reaching this, trying to reach this level today. All right, so we have our support levels figured out. We have the pivot level figured out, and now we want to have the resistance level in case the NFP number is better than expected. All right, so this is our resistance level colored in green. Okay, so now we can zoom back in for a short-term trade and see what we can expect from this market. So we have already broken below the pivot level. Until tomorrow, chances are, we already have a 3 black crow. So if tomorrow we have another bearish day and the market reaches around here at the time of the NFP, then this would be your next support level. If the market corrects a little bit tomorrow and we are back to the pivot zone, this will be your support level. All right, so no matter where you get in, again, this is similar to dollar yen. If the NFP number is better than expected but worse than previous, you want to go ahead and target the closest support level. If you're around here, you want to target this one. If you're around here, you want to target this one. I'm doubted that by tomorrow we're going to be reaching this level. So that is out of the question. But if we do reach this level before the NFP, then in case of a worse than expected NFP, you need to go and find another support level, which I believe should be around, yeah, this has been tested a bunch of times. So this is around the area that can be set as doomsday support level. All right, And vice versa, if the NFP number comes out better than expected, but not better than last time, you want to go ahead and target this pivot level at 0.96, almost 0.97. If you're already here, you want to go and target the next resistance level at 0.98. All right, and if it's better than expected and better than previous time, that is when you can actually enter a long-term trade, $4 Swissy, and target, depending on your risk appetite, depending on your margin. Again, so this gets a little bit more technical. I don't know what you guys are at with your portfolio. And again, I have to put a disclaimer over here. These are all market commentary, and your trading really depends on your margin, your account size, your risk appetite, your financial situation, your financial health, your trading experience, your leverage. So there's so many things that come into play, and these are all general ideas of how I'm hoping you guys will take away and then apply it to your own portfolio management. All right. So definitely when I'm talking about these, do take it with a grain of salt. So I had a question, can we trade the NFP on gold also? Yes, absolutely. And gold, I don't know who asked that, but gold prices have a reverse, normally have a reverse a correlation to the US dollar. So as NFP, positive NFP impacts the US dollar in a positive way, you can expect the reverse for that of gold. So if we have better than expected NFP numbers, we could expect gold prices to drop slightly, and vice versa. All right, we have 3 more minutes. Let's quickly take a look at, let's see, Aussie dollar. Oops, Aussie dollar is going back. Aussie dollar has broken above our pivot levels from the last time we had an Orbex webinar, and now is touching this new pivot level on the monthly chart. Again, we're going to go ahead and create a Fibonacci retracement for the most recent. So here is our support level. Here is our resistance level. I'm trying, guys. Okay, so this is the 23% Fibonacci. This is our resistance level. So be careful. Okay, so Aussie dollar, it's actually the reverse of that of dollar CAD and dollar Swissy. Why? Because US dollar is quoted second. So if the NFP is better than expected, we're going to expect the Aussie dollar pair to drop. All right? The same goes with Kiwi dollar, Euro dollar, all right, and pound dollar. All of these that have US dollar stated as the second currency, you see, pound dollar, Euro dollar. All these, in case of a better than expected NFP number, we're going to expect them to drop, and if the NFP number is better than expected, we're going to expect them to go up. All right, because a stronger currency, a stronger US dollar is going to push the pound dollar pair to the downside. So going back to Aussie dollar on the daily chart, it has actually been, we saw this reversal coming. Aussie dollar seems to have been reversing, but if NFP comes better than expected and better than last time, we could expect the pair to fall back first to this pivot level at 0.7367, and then to then probably falling into this range, back into this box chart pattern. If the NFP number is worse than expected, Aussie dollar is going to go shooting back up, and we could expect it to reach 0.78, 54 and even higher in case it's not only better than expected but also better than last time. That's it for today, everybody. I know that some of you guys asked for my Skype number. We don't give it out over here, but if you do want to talk with me, we do have an education course right over here. You can get my updates for free on investival.com. Go over here, sign up, don't forget. And as for Orbex, if you have any questions, if you have any recommendations for what to cover, definitely send your messages to orbex.com and we will take care of this. All right, thank you guys so much for interacting, for attending, and hopefully I'll see you next time.